Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 7th of October. Starting off with the FTSE 100, which is still in that dead pattern either side of the 50-day moving average, obviously waiting for the presumably calamitous budget at the end of the month, and no reason really to do anything until that time. The damage has already been done in terms of people taking their money out of the UK market, and obviously the lack of volume and liquidity that we've got ahead of the painful budget that we're going to have. 82.40 the support there, and 83.60 the resistance of that May resistance line. Looking for an end of day close above that May line to take us to the top of that rising trend channel from this time last year as high as 86.60, which presumably might have to wait until after the budget. On the downside, 81.60s are the support, initial support. Worst case is that we head down to the 200-day line and the floor of that falling May channel at around 80.20, but hoping that even with the budget giving the market a pie in the face, will still remain above the September support. Moving on to the DAX, which is in more normal mode, as its government presumably wants it to win. Here we've got the pullback from the 19,500 peak that we had, finding support at old resistance, basically the spring-summer resistance around 19,000, and above the latest gap there, 18,900. Still looking for this market to head up to 19,500. Best case is up to 20,100 in the top of the one-year trend channel. RSI still at 55, above the neutral 50 level, so we are suggesting that the glass is still half full, even though obviously the market looks a little bit tired at the moment. Revisiting the Dow, which we looked at yesterday, but nice to have another look at it. Here you can see our old resistance has become new support, 41,800. In fact, you can argue that we've got support above old resistance of 41,500, looking for 43,300 in the top of that one-year trend channel by the end of this month, which I presume we'll get, given that there needs to be a bit of window dressing ahead of the US presidential election. We do break down 41,500, seen as the worst at the moment. Moving on to Bitcoin, and here you can see that we bounced back above the 200-day moving average after bouncing off the 50-day moving average there at 59,700, and looking for finally to get a break of that late February, early March resistance line at 68,000. If we can get that, then obviously we'll be looking for this market to shoot up to the record levels again towards 74,000 by the end of this month, and a nice turnaround there, which may have or will deliver enough momentum for a break of that 67,000, 68,000 area. RSI at 56, so right in a good place for breaking higher, and obviously looking for an end of day close above the 200-day line today around 63,800. Moving on to gold, and here you can see that we're consolidating at the highest levels. Rising trend channel, the steeper red one there, has its floor around 26.40, and above that we're looking for as high as 28.80 by the end of next month. If you're cautious, you just wait for a clearance of 2,700 before assuming 28.80 is on its way. Might have to factor in 26.20, which was the old September resistance, as a potential support point intraday as well. Moving on to the stocks, and starting off with we're with Atlantic Lithium, and here you can see that we've broken above the 50-day moving average for the first time since June. That is around 13.8 pence. We're also trying to break that resistance line there from the end of May, which is, I suppose, at current levels, or at least 14.5 pence, and above 14.5 pence, we're looking for this market to head up to 18 pence, the old initial 2024 support for this market. So looking like a long-awaited turnaround there after the multiple support points and an uptrend line there in the RSI window, which should be able to power this market through over coming days. On to Beeks, which had a fantastic RNS today. I think all the metrics looking very good indeed from memory. You can see the final results there. Gross profit up 24%, underlying profit before tax up 68%, so they're all pretty good there. And obviously the uptrend in the stock continuing. Top of the channel there from back in October last year, heading for as high as £3.40, which we're looking for by the end of next month, while we remain above the 50-day line at £2.45, which should hopefully be achievable given today's results. On to Cora, which I think I've called up all on my own. Here we broke the resistance line and the 50-day line there at 1.6 pence, and have managed to hit the second target there, the red line there at 2.85 pence. Above that, we're looking for the shares to deliver a greater move, which would be up to the old support area from 2023 last year, around 3.6 pence, and looking for that by the end of this month, while we remain above 2.85 pence. New mention for DigitalBox, which although it obviously looks really illiquid and probably a massive spread as well, has actually broken up or broken higher. Here we need an end of day close above 4.25 pence to give us a move towards 5 pence, but the main thing here is that there seems to be something going on in terms of a potential turnaround. We've got the rising 200-day line there as well, so it could be that we're in a run up to a golden cross. So 5 pence, hopefully the minimum there, while we're above the latest breakout area at 3.8 pence mid. Moving on to the star of the show at the moment, by quite some distance, which is EnergyPathways. Here, everyone jumping up and down, but the technicals here above 2.9 pence, which is basically post-March resistance. We're looking for the shares to get back to where they started at 4 pence plus back in December, 4.6 pence, the upper parallel of that red resistance line target that we've already broken quite easily, and looking for that over the next week or two, certainly by the end of this month. Moving along to global petroleum, where it seems that all and sundry are taking the credit for the latest move, although I think that we were onto it rather earlier here. Here you can see that we've got the next level up here around 0.41 pence, which is the target we're looking for, while we're above 0.28, which was, I think, the third or fourth target that we had since the shares turned around. Still in the aftermath of that golden cross there between the 50 and 200-day moving averages. But it looks as though this one really is ready to turn around and stay up as well. Onto Gfinity, which is normally a real problem child with more full storms here than the Second World War, or the First World War maybe even. But we've had a decent rebound off the July support there, 0.015, and looking for the 200-day moving average, 0.03 by the end of this month, if this rally has legs. As you can see in the recent past, we've just had one-day wonder spikes, and this we had even last month. So I think one would take the 0.03 in the move to the 200-day line with a pinch of salt. On to Mosman, which looked as though, well, at least earlier in the year, looks as though it would go up and stay up. It hasn't done that, but having another go at building a base here above a rising 200-day line, which is the main positive at the moment. End of day close above the floor of the latest gap there at 0.0375 could be enough to get the shares up to 0.052 by the end of this month, but has been a bit of a difficult situation there. Onto Neo, which obviously I interviewed during the week, and here bouncing off the rising 50-day line there at basically a penny. Next level up, well, clearly the 1.25 area, which the shares listed at, and then up to 1.7, but not quite out of the woods yet, even though we've got rising 50 and 200-day lines. We'd like to see the RSI get above neutral 50 versus 48 before we can assume we are finally on our way. Decent JV news today from Power Metal, and here the shares gapping up through the 50-day line, which tends to be a decent signal. While we're above the floor of the gap there at 15.5 pence, looking for the shares to head up to basically early summer resistance at 20 pence by the end of this month. I don't think that would be too much to ask at this stage. SkinBiotherapeutics is next, and here we've got a situation where the shares, if I can get the right stock up, are bouncing off a rising trend channel base. So we've broken through the 200-day line there at 10.9 pence. Obviously, these situations are rather fraught in the sense that the rising trend channel base may not actually be there, but recent resistance from September at 13 pence, maybe that's the safest place to look at this point, especially while the 50-day line is still falling, as is the 200-day line. So maybe one to step back and take a view when more evidence is forthcoming. Finishing off with strategic minerals, and here, as you can see, breaking that line of resistance there, 0.23, which I'm sure nobody else has noticed, but the top of the channel there, 0.36, which we're looking for by the end of next month, although the way things are going, we could actually get that a bit sooner, hopefully the end of this month. Ideally, we stay above the 50 and 200-day lines, which are both rising there at 0.19. That means that we're going to a golden cross, and that is typically the strongest part in the cycle. That's it for me today. More updates tomorrow.